Welcome back to Tech Economy, ladies and gentlemen. I am Tim, and I've got a lot of news for you. Something you're going to want to hear about right now is BRICS. If you don't know what BRICS is, there's going to be more on that later, but I have to fill you in on what is going on there. There's been a lot of news happening lately, and none of it's really good. No matter how you dice it, no matter how you slice it, no matter how you mash it up and saute it, the news just keeps getting worse. I've been sitting here in the bunker. I haven't left in a little while, and I've been working on this sweet beard. And if you guys can tell, I've got a baby face, and I do not grow facial hair very well right here or right here. Mustache comes in on point, but the rest of it, it angers me. So I'm just going to kick down in the bunker and keep doing this economic data for you. So I hope you appreciate it. Now, back to the topic at hand. I've been listening to a lot of Rich Dad Radio while I've been, well, I wish I could say grooming this amazing beard, but it's, No Shave November, and I know a lot of you guys probably participate in that yourself. But I've been listening to a lot of it in the bunker here, and there's a lot of stuff going on right now with gold. And I'm going to give you some compelling reasons to buy gold from actual people that were on the Rich Dad Radio show. A lot of different minds came on, all from different backgrounds. We've got some very powerful people, so make sure you stay tuned for that. But first, let's get into the recent tweets that Robert Kiyosaki's been just bombing out there. If you don't follow him, he's a fantastic source for information. But you don't have to because you follow me and Greg on Tech Economy. If you don't already, hit that subscribe button. Join our free newsletter, 100% free. We just do this because we like to keep people informed, and we are big advocates of gold and silver if you haven't found out by now. If you don't know, now you know. Let's get into this, right? Robert Kiyosaki has just been on an absolute tear lately, and I'm going to digest all of what he's been doing and put it in layman's terms for you so you can get caught up in just about 10 minutes or so, or less, who knows. So right away he says, "Ship of fools, forever and ever, financial experts have promoted the idea. Smart investors," and I quote, "invest 60, 40, 60 bonds, 40% stocks. In 2024, the 60-40 investor will be the biggest losers. Before going down with the ship, consider a shift to 75% gold, silver, and Bitcoin, and 25% real estate and oil stocks. This mix may allow you to survive the greatest crash in world history." Wow. Good luck and take care is how we sign that one off. Dude, powerful stuff. I've covered him before, talked about his predictions, what's going to go on with gold, Bitcoin, silver, etc., and the economy. He's obviously on one side of the equation. Where are you? I know where I'm at. I'm a little bit in both, right? I've got my feet in gold, silver, and Bitcoin, about 30% of my portfolio, not at 75 like Robert says, but I'm inching forward there as I'm seeing this stuff come out. And after today's video, I'm probably gonna make some moves to allocate more, but let's get back to my own personal situation later. You guys don't care about that. Another tweet, "I keep buying more gold, silver, and Bitcoin because our leaders want more war and poverty. Work hard, spend wisely, and save gold, silver, and Bitcoin. Our leaders don't care about you. So please, take care of you and the people you love." All right, straightforward. Before I get into his video and break down a lot of compelling reasons to buy gold, hear this last one. To me, this is the most powerful Robert Kiyosaki tweet he's put out in a while, and this one just came out. "Central banks like Fed are buying gold. Does this mean fiat money is safe? Hell no. Central bankers are saving themselves from their own incompetence, and that's when they buy gold. Their job is to protect banks, not you. Get smart. Protect yourself from central bankers. Save gold, silver, and Bitcoin." I've said that in my last several videos. Follow the moves the central bank makes. The central bank knows what's going on. They have their ducks in a row. We don't. We're always behind. And you're going to see later in this video here, I'm going to show you a mind-blowing video clip where we talk about how the US is so behind on this news of everybody globally going BRICS, which I'll get into, going to a gold-backed currency, and they're depegging everything from the dollar. They are totally throwing the dollar out the window. So stay tuned. I'm going to digest that right now. So before dissecting the video here from the Rich Dad Radio show, which is absolutely incredible, there's so many good nuggets in there. This is probably the most entertaining and enlightening video I've watched on his show, and I am a subscriber. It's a great show. Let's first talk about what's going on with central bank gold buying. Fundamental Research Corp, FR Corp on Twitter, put out this text. "This marks the second highest Q3 volume on record. In the first 9 months of 2023, central banks purchased 800 tons, up 14% year over year. Wow, their third biggest quarter ever. So let's talk about that as reason number one, why you need to have some exposure to gold or silver. I like gold a little bit better, but I got some silver too. So let's get into the Rich Dad Radio show. A lot of good points here we're going to take away from. I'm going to comment on each one, but here we go.
Why is the price of gold rising? What's going on in the economy?
Right. It's sort of a two-part answer, Robert. One is exactly as you put it. Why is gold going up? What's going on? What's the basis for predicting $15,000 an ounce by 2025, which I do. But then also, well, what does it really mean? Is that you said it's not a good thing, and I agree. It's not a good thing for the economy. It's not a good thing for most Americans. If you have gold, you can pat yourself on the back and say, "Yeah, I made a lot of money on gold," but that might be in a world where you're losing a lot of money on other things, and you need to be alert
Did you hear that? I'm patting myself on the back right now. I want to light this up, but Greg won't let me in the bunker. We have a no smoking policy, which is totally cool. I'll go outside. Now, you're going to lose a lot of money on other things, as they stated, which could be stocks. It could be mutual funds. It could be your home. Who knows? They're talking about all sorts of other investments. Now, this is why I have gold inside of my IRA. I could have let the tons of money I have in my equities tank and hope that in about 15 years when I'm ready to draw on that money to retire, that they've rebounded and I'm all good. Or I could have done what I did, and that's put a portion of my money into gold, which if it goes to 15K in 2025, like they said, that's over a 7x return from today's price, which is why I'm about 17%. It's actually getting towards 20 now in my gold portfolio inside my retirement. Now, we're in just the third bull market for gold. And if you look back at the long history of gold, you're probably like, it's only really in its third bull run. But look at this. We used gold as money, official money, until 1971. So there weren't any bull or bear markets. There was just gold. That was money. That was currency. Gold then detached from the dollar when Nixon eliminated gold as trade from our foreign trade partners. That's when it happened. So we're tracking it basically since 71. From 71 to 80, we were in our first bull market for gold. It went up over 2,000% from 35 bucks to over $800 just for an ounce, like right here. From 80 to 99, we entered a bear market. The market was raging otherwise, so gold kind of went down a little bit. The second bull market was 99 to 2011. It went from 250 an ounce to 1900 an ounce for this bad boy right here. Gold slowed down after that, and then again got in a bull run in 2016, which we're currently in. And if you take the average of those two runs, which we already saw in history, which was 2,000% and 700%, you get a price target for this run around $15,000 per ounce, and that's how they arrived at that number. That's the math that just went down on the Rich Dad channel that I shared with you. And that was by James Rickards, who's kind of a big deal. Former national security advisor for the Pentagon and the CIA. Mad respect, James. Now, if you believe in this analysis, which I wholeheartedly do, get the gold now. Because let's be honest, gold has to get over 3,000 an ounce, 4,000 an ounce, and 5,000 before it even has a chance of sniffing 15,000. But waiting only diminishes your returns. Yet another reason why Greg and I talk about this all the time on our channel and in our newsletter, which you can subscribe to below. We started covering gold around 1,800. Now we're at 2,000. So that's when I got in with my last big purchase. I plan on buying more every chance I get, systematically investing my paycheck about every single month. Well, I don't get a paycheck. I work for myself. But when I take distributions. So let's carry on and see into what is going on next in the channel and here's some other opinions and reasons why gold is so hot right now and a must purchase in my opinion and these guys' opinions. Now, despite what your smug hoity-toity financial advisor is going to tell you, gold is extremely liquid, but don't just take my word for it. I've done all the homework here for many, many years. Watch this clip below.
Is that erroneous or?
No, gold and silver are extremely liquid. They're one of the most liquid asset classes in the world. I'm a lender, and I love lending against gold and silver, particularly gold and silver where I control rather than the borrower controlling the collateral. They're enormously liquid. I live in a circumstance that, even given the problems that we face today, is substantially more civilized, more benevolent than the young Vietnamese woman who, the choices that she had in terms of her savings and her business were limited compared to the choices that you and I exhibit. Also, because of the asset classes that I deploy capital into, include what you would call derivatives, what I would call securities, having access to cash to access securities markets without having to sell my gold or silver is convenient for me. Interestingly, because as an example, I'm the largest shareholder of Sprott, a large financial services concern, which is built around gold or silver. A financial planner would tell me that I didn't need to own any gold, that my life was already leveraged to gold. But again, owning physical gold makes me sleep better.
Hopefully that clarified some information about gold. And if you work with a company we recommend below, you will have a buyback program you can access it. You can get rid of your gold when you want. The bottom line is you should have some of your net worth in an asset with zero counterparty risk. That asset is gold. Let's go one step further and examine why central banks and numerous countries are hoarding gold. If you aren't convinced yet, this segment will absolutely blow your mind.
For the last 16 years, about 17 years, Brazil, Russia, India, China, South Africa, they've all been hoarding the Earth's gold in preparation for introducing a new gold-backed programmable central bank digital currency. So a lot of your wonderful listeners, they listen to your show where you talk about buying precious metals, and I'm sure many of them do buy precious metals and many of them don't. Meanwhile, Brazil, Russia, India, China, South Africa, they've been hoarding the Earth's gold in preparation to introduce a gold-backed programmable central bank digital currency. Don't believe me, folks, look it up. It'll be based in Shanghai, China. It's called the New Development Bank, and this will be a new financial system. And now there's BRICS 11. You have Saudi Arabia joining, you have Dubai joining. So what's happening is the US dollar, which was only tethered to this thing called the petrodollar beginning in the early 1970s, Saudi Arabia has now left the petrodollar. So folks, this just in, we have a petrodollar with no petro. So we're about ready to see the collapse of the dollar, and only people like yourself and the listeners of your show who've decided to take your advice and to acquire precious metals are going to be prepared for it. And so I just encourage everybody out there, if you're listening right now, before your dollars disappear and evaporate into nothingness, I would highly recommend that you schedule a consultation with a precious metals dealer.
Now, if you're interested in precious metals, there is a company out there that can match for you. There's a link below. You can take a quiz and you can check that out yourself on your own time. Or have fun using your dollars for toilet paper, because that's about what they're going to be worth, you guys. I really encourage you to look up this BRICS Pay thing, because once that rolls out, transactions are going to be handled without the US dollar. When that happens, you'll see something called the de-dollarization. So what happens here is we import our goods from overseas. And how do we pay them? US dollars. Well, what happens when people simply don't put any more value on the US dollar? What's going to happen? People don't want to trade with us? Inflation goes up more? Cost of goods goes up? To me, that is terrifying. And for that reason, I like to side with the central banks, because these are smart folks that are ahead of the game. I've said that in many videos below. Please subscribe. I shared with you that today, and that's why I invest in precious metals. The links are below if you do the same, but I would encourage you to do it before this beard fills in, because it's going to take a long time. But if you do it first, you're going to catch that run up and you're going to catch the best prices. Again, we're around $2,000 an ounce, depending on when you watch this video. Look at the recording date, obviously, but then compare it to what's happening. See where gold is at. We're headed towards 15,000. Robert Kiyosaki says we could get to 75,000. 15 is a conservative estimate. I can live with that. That's a 7x on my money. So again, if you want to take advantage of it, we're getting away from the dollar. It's out there. It's very obvious. There's plenty of news. Look up the BRICS thing. But before you do that, fill out the lead form below and join our newsletter. You're going to get information that could save your portfolio.